This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil refiners are ramping up output to meet a synchronized uptick in demand across Asia, Europe and the United States, but plant maintenance and high natural gas prices will constrain supply in the fourth quarter, company officials and analysts said. This comes as profits for producing ground transportation fuels such as diesel and gasoline have rebounded globally for the first time since the start of the pandemic, as countries gradually emerge from COVID-19 movement restrictions. A coal and natural gas crunch across Europe and Asia, which has forced some power generators to burn kerosene, diesel or fuel oil and stock up ahead of the peak winter heating demand, is also supporting global oil prices.
Major economies will produce more than double the amount of coal, oil and gas in 2030 than is consistent with meeting climate goals set in the 2015 Paris Accord to curb global warming, the United Nations and researchers said on Wednesday. The UN Environment Programme's UNEP Annual Production Gap Report measures the difference between governments' planned production of fossil fuels and production levels which are consistent with meeting the temperature limits set in Paris. Under the pact, nations have committed to a long-term goal of limiting average temperature rises to less than 2 degrees Celsius above pre-industrial levels and to attempt to limit them even further to 1.5 C.
Moving on to the top news in the energy sector.
U.S. crude and fuel inventories tightened further last week, as supplies of gasoline hit a 2-year low and inventories at the largest U.S. commercial storage hub dropped to a 3-year low, the Energy Information Administration, EIA, said on Wednesday. Crude inventories fell by 431,000 barrels in the week to October 15 to 426.5 million barrels, compared with analysts' expectations in a Reuters poll for a 1.9 million barrel rise. Crude stocks at the Cushing, Oklahoma, delivery hub fell by 2.3 million barrels to 31.2 million barrels. That's the lowest level since October 2018, and points to tightness in the market that may take some time to alleviate.
India is forming a group that brings together state-run and private refiners to seek better crude import deals, Oil Secretary Tarun Kapoor said on Tuesday, as the country grapples with soaring oil prices. The world's third-largest oil importer and consumer, India depends on imports for about 85% of its crude and buys most of it from Middle East producers. Initially, the group of refiners will meet once in a fortnight and exchange ideas on crude purchases.
Next, we have the top news in metal markets.
China's commodities market slumped on Wednesday, led by sharp declines in thermal coal prices, after the state planner said it was looking at ways to intervene to cool record high prices of the fuel. Cheaper coal prices and boosting supply could ease China's factory gate inflation, which hit record highs in September on the back of a power crunch and soaring commodity prices. Thermal coal futures fell on Wednesday from the previous session's record highs, hitting its limit down of 8% at 1,755 yuan and 40 fen, $274.71 per ton. Coking coal and coke futures opened down 9% to hit daily trading limits as well.
Global primary aluminium output rose in September to 5.508 million tons, up 1.77% year-on-year. Data from the International Aluminium Institute, IAI, showed on Wednesday. Estimated Chinese production was 3.183 million tons in September, the IAI said. We will now look at the top news in the agricultural sector. China's state planner said on Wednesday it will take steps to safeguard fertilizer supplies by improving capacity utilization and rail transport, keeping tabs on import and export trends and strengthening the role of reserves. Prices of fertilizer and urea have surged this year, boosted by high prices of coal, a feedstock ingredient, and concerns over lower supplies due to a crackdown on high energy-consuming industries including fertilizer. Urea futures on the Zhengzhou Futures Exchange have gained over 70% this year, but was last down 8% at 2,978 yuan, $465.92 per ton amid a slide in coal prices.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.